What's going on, YouTube? In today's video, we're going to cover two trades we took last week. The net result was 10R, 10%, you could say, 10 risk to reward. I'm going to walk you guys through how we were viewing the markets and the things that I teach with my students in the Discord. We're going to take a top-down analysis of both pairs and show you how the fundamentals played out in our favor. Stick around to the end and you might learn something new. Okay guys, we're gonna start our analysis with Aussie New Zealand dollar to begin. Like I said, we took one trade each on both these pairs and we netted about 9 to 10%, 10R, 10 risk to reward. I'm gonna start here on the monthly with Aussie New Zealand dollar and walk you through what I was seeing. So if we just zoom out and we look left, we could see that price made a big drop quite some time ago, okay? And with this strong push up, taking out all these highs, like this high, and this high, I'm assuming that this is a strong structural leg to the upside, right? So we've been in discount for a while. I want to see price reach a premium, okay? Because this is a structural break to the downside, my assumption is that we're gonna push back up into higher prices and reject and continue our downtrend, right? This is how we view our structure. We're gonna look for an optimal trade entry in this area and then look to take price lower, okay? Just based on structure, right? That's gonna take years to play out. We don't need to anticipate that right now, but as far as what I'm seeing on the monthly from our most recent structural leg, it looks like a bullish structural leg. So we're gonna continue with that bias, okay? We can mark it out with our fib and just keep our markup like that as such. Now dropping to the daily, we could see more information on what we were seeing, okay? So we're here on the daily. We had our range established using our fib and we could see that price bounced very nicely from this optimal trade entry area, okay? So because we got this bullish reaction from this rejection, we're gonna maintain our bullish bias using this structural leg, okay? So because this made a bullish structural leg and it took out multiple structural points like this, that's a significant area. We wanna continue with that bias, right? So if we just bring this range out over here and we make a new one, let's establish our range again. And we can see that we have a daily fair value gap, okay? Now this could be an area to target. This could be an area just to have marked out in your analysis. It's an important area. This is an inefficient price zone, right? This is an area that price wants to meet within the range to create an efficient range, right? So what we're gonna do is we're gonna mark our daily fair value gap here and mark it as a potential area for price to land, okay? So we could see that within this structural bullish push, we've started to create intermediate bearish structure day by day, right? This is a daily time frame. We're looking at daily intermediate structure, okay? What is it doing? It's taking out internal liquidity, like this low and this low. These are two key lows you wanna have marked out within your structural range, right? These look like very weak lows that could be taken out. Now dropping down to the 4 hour, we could see more information on what we were seeing for that day. I believe the trade was taken on Monday last week. So we have our daily fair value gap marked out as a potential target. And we're just playing between this high and this low right now, okay? So the range on the 4 hour that we're playing between is this high and this low. So what can we see within this range, okay? Within this range, I'm seeing we had a run on sell side liquidity, right? So this low took out this low, right? What does that tell me? That tells me that price, because of the nature of what it's doing, we're kind of just ranging, but we're not just making equal highs and equal lows, we're taking out equal lows and equal highs at the same time, right? So this low to me was a run on sell side liquidity. You could say it took out this low too. Okay, so that means that all this liquidity here is dealt with, it's taken care of. It's all these people trying to buy from this support are all taken out at this point based on this drop. And this is how we view the market in terms of liquidity, okay? So with that being said, I'm assuming that because our sell side liquidity just got taken and we're having a strong bullish push, the next high to anticipate to be taken could be this one, right? Now, with that being said, if this is our buy side liquidity and that's what's going to be taken out next, then we have a clean supply on the 3 hour that we can mark out here. Now, this was the basis for the trade, but I wanted to see what would happen at this zone before I took a trade, okay? So I mark out my 3 hour supply and I wait to see what price does from that supply, okay? So the trade was taken in New York, I believe. Late New York, or maybe, no, it was Asia. So this is New York session here. Let me drop to a 1 hour just to give you guys clear picture, right? So I have my sessions marked out. You can see in my other videos how I do that. I do have the London session in blue, the New York in red, and then the Asia in yellow, okay? So we had that run on the buy side liquidity like we anticipated, and we had a nice mitigation of this extreme supply, okay? Now, my overall bias is bearish. One, because we're below the 200 EMA, clean rejection. Go back to the daily, what's our expectation? We had that bullish structural push, okay? We just took out this low. Now we're anticipating that this low is gonna get ran and this fair value gap get mitigated for an efficient price range, right? So I go back to the 1 hour and I start to recognize that price is starting to change direction on me, okay? So my entry was taken right at the break of this line, and my stop was put above the previous high at the beginning of Asia session, right? My target overall was the fair value gap because it needs to be filled, right? These little gaps in the market needs to be filled. This is something widely taught in the smart money community. This is just how ranges are efficiently created and efficiently mitigated, right? So with this trade taken in Asia, I also wanted to check the fundamentals. So I wanted to see if there's any news releases that could affect the Australian dollar or the New Zealand dollar and potentially be a catalyst in the formation of my trade, right? Now, a lot of people, they discourage trading news. I would say that trading news is only safe to do when you're trading with wider stop loss, okay? So if you're taking more of like a swing approach in the market, like from the 4 hour and the 1 hour, I'd say it's okay to take news release trades. Just make sure that you're not getting in like immediately as the news drops, right? So this entry was pre-news basically, okay? So let's take a look at some of the fundamentals. You can see here on Forex Factory for that day, Monday was the day we took the trade, right? The sell. And there was no releases on Monday, but I did anticipate that there would be news releases Tuesday morning, right? So Tuesday morning, we had the Australian dollar cash rate and RBA rate statement. And whenever you see red folders, you know it's going to move the market. So with that, as well as extra New Zealand news the following Asian session day, I wanted to see if price was going to play in my favor, okay? So this was a trade I was willing to lose money on, and we had a catalyst for it to play out, right? So with that being said, we can go back to the charts here, and I can show you just how the trade played out. So we had a good reaction given the Australian dollar news at that time. Now, I wanted to find a time in New York. So it was New York. This was the beginning of New York. This was a time where I set my trade risk free, and I wanted to see price continue in that direction given the following news the next day, right? So New York, we had a continuation, retest over the break, and then boom. the New Zealand news came out and boom, price just dumped in our favor, right? We took our profits right at the top of that zone, and that secured us about 6%, okay? If you're trading funded, let's say $100,000 account, that's $6,000 in your pocket, right? So with that being said, this is how the Australian dollar New Zealand play worked in our favor. This is our analysis. And let's also take a look at the New Zealand dollar Japanese yen play as well. So using correlations and knowing that there was New Zealand news coming out, I was also keeping my eye on New Zealand dollar Japanese yen. We could see if we just played the bars back in time here, what we were looking at, okay? So at the same time I was looking at the Australian dollar New Zealand dollar pair, I'm also looking at New Zealand dollar Japanese yen. We could bring it back to the weekly just to see what we're looking at in terms of price. At the broader scheme of things, it looks like this pair kind of just been ranging over the years, right? Because it's been ranging over the years, you just want to pay attention to the most immediate price action that's available. And, you know, you could potentially mark out where you're sandwiched, okay? So you can mark this as the next high, the next like significant high, and this is like the next significant low, basically. Okay? And if we take a look at this area here, it's a key support and resistance area, okay? So it's good to implement every technical analysis because every pair moves differently, right? There's certain pairs that play well to support and resistance, others that don't. Some are better with smart money, others aren't. I would say for the yen pairs, a lot of them do play well to support and resistance, and you should implement them in your technical analysis, okay? So you can see our support and resistance is drawn here on the weekly. It's kind of like a key psychological area, right? We have the round $80 price point there. That does make sense as like a support and resistance zone. We can drop to the daily here, take a closer look at things. So our 200 EMA has been holding very well. It looks like we dip below it here just to get to that support and resistance zone. But overall, I'm still pretty bullish on the yens. That was my initial bias going into it. Dropping down to the 4-hour, we could see where we were within price that day. We came from our support and resistance zone and we had a strong bullish push. Now, one thing I was looking for on this was a nice rejection of that 200 EMA on the 4-hour, okay? So we did dip below it once and twice here. Now I was looking for price to maintain above it and continue pushing higher, okay? Even if it was for like a quick scalp or, you know, like a quick intraday move, I still anticipated price to maintain above our 200 EMA, okay? So this is what I was seeing that day, as well as while I was also analyzing Australian dollar, New Zealand dollar. I was noticing that we had a lot of equal highs, right? So there's a lot of buy side liquidity up here. And because price is maintaining bullish market structure, I don't want to fight the trend. I want to go with the trend, right? So I take my 1-hour demand that I find here. Very clean demand, right? It took out these lows, these prior lows, and pushed price up, right? So this is a very clean demand we could draw out. And my anticipation was for price to tap into this demand and take out these highs, right? So I had my limit set. I had a limit order set for here. And I wanted to see what price was going to do given the news that was going to come out, okay? So, again, this played out during Asia session. So right now I was in New York. And during New York, this is where I set my limit and anticipated what was going to happen, okay? So New York, end of New York, we tap into that zone. And we get a nice little doji formation, right? This indecisive candle pattern. This is what you want to see around your supply and demand areas, because that means that price is indecisive and potentially looking to change directions, right? So we get that doji, we get another one, and then I believe the market break happens, price just kind of dances, and then boom, TP's hit immediately, right? So our TP was put above this zone, and because we were in 2 trades at the same time, usually usually when I'm in 2 trades at the same time, I like to take quick profits on one and then try and go risk-free on the other and let it play out, right? So for New Zealand dollar, Japanese yen, we took our profits here for a nice 3%, 3 risk to reward, take profit, and that was just a quick trade, right? We anticipated price was going to move in our direction given our fundamentals, and we anticipated price was going to move in our direction too, trading with the trend and using our nice little demand that we found, right? So trading off the 1 hour structure holds very well, like I said before. And you know, if you're a beginner and you're trying to get those sniper entries, you know, 1 to 10, 1 to 15, you're on the 5 minute and the 1 minute, just understand that you're not gonna hit every single trade, okay? And it might affect your psychology. You may want to take a shift to this 1 hour, 4 hour approach. It might help you in the long run, but you can see how structure just holds a bit better, you know, day by day on the 1 hour. These are just the daily moves, right? We're taking out previous daily highs and making new daily lows, okay? It's a very simple approach, and I feel like, you know, each and every one of you could improve your trading if you just focus more on the higher time frames, okay? So these were our 2 trades. This was Aussie dollar, New Zealand dollar with New Zealand dollar, Japanese yen. We were able to capitalize using our fundamentals again and our regular technical analysis, okay? So hopefully you guys learned something from this. Hopefully me showing you how I analyze and view the markets helps a little bit in your understanding of our smart money concepts, our supply and demand concepts. Thank you for watching. I appreciate each and every one of you. I would appreciate also if you guys like, comment, and subscribe. My YouTube channel is pretty small, but we're still growing. We're just gonna go at it each week, try and get 1 or 2 uploads a week. If any of you are looking for some free resources, I do have a free Telegram group where we do offer trade ideas and we bounce and share different things throughout the week. We also offer a free PDF ebook if anyone's looking for some more free resources. This is strictly for beginners. It just gives you the basics on Forex. And if any of you are looking to join the private community, we also have links in the description below. We do offer one-on-one mentoring as well as a 25 video course with 7 chapters inside. With that being said, I appreciate each and every one of you watching this video. Happy trading.